1. Oil prices remain the biggest market driver. Oil is still the center of global financial attention. Brent crude recently closed around $108 a barrel, as investors fear supply disruptions tied to Middle East conflict and shipping risks near the Strait of Hormuz. High energy prices are now influencing inflation expectations, stocks, and central bank outlooks. 2. Markets are repricing interest rate expectations. Rising oil and geopolitical risk are forcing investors to rethink the path of interest rates. Analysts say central banks are under pressure because expensive energy could keep inflation sticky, even if economic growth slows. That creates a classic stagflation fear in markets. 3. Inflation concerns are back in focus. Inflation is once again a major concern for Wall Street. With energy costs elevated and tariffs still affecting business sentiment, investors are closely watching whether price pressures will stay higher for longer. This is making rate cut hopes less certain. 4. Global stocks are trading in a more defensive mood. Investors are rotating more carefully across sectors as they assess inflation, oil, and growth risks. In this kind of environment, money often shifts toward defensive assets and companies with stable cash flow instead of purely speculative growth plays. 5. Gold is gaining support from uncertainty. Financial uncertainty is strengthening demand for safe haven assets, and gold remains one of the top beneficiaries. Investors often move into gold when inflation fears, war risks, and policy uncertainty rise at the same time. 6. Bitcoin and crypto face a tougher narrative. Crypto remains under pressure as the market waits for stronger regulatory and institutional catalysts. Reuters-linked reporting this month also noted that some analysts have turned more cautious on Bitcoin and Ether due to slower progress in U.S. legislation and weaker near-term optimism. 7. Energy stocks may continue to outperform. As oil and gas prices stay elevated, energy companies are once again in the spotlight. Analysts are watching whether the current geopolitical premium in oil can last long enough to support another leg higher for the sector. 8. Food and consumer costs could rise again. Higher energy prices are not only a fuel story. Reuters reporting warns that supply disruptions and rising transport and fertilizer costs could create broader price pressure across food and consumer goods, especially in vulnerable markets. 9. The bond market is becoming more important again. Treasury yields and global bond pricing are back in focus as investors reassess inflation and rate timing. When the bond market starts moving aggressively, it often spills over into stocks, mortgage rates, and the US dollar. 10. The biggest financial theme right now, uncertainty. The real headline in finance today is uncertainty. Oil, inflation, central banks, war risk, crypto regulation, and growth concerns are all colliding at once. That combination is making investors more selective, more defensive, and much more sensitive to breaking news.